Welcome back to another update from the P2P lending industry. In this video, we will discuss the best and worst performing platforms in May. The performance of a platform's portfolio directly impacts the risk and return that you have to consider on a particular platform, which is why you should always pay attention to the latest news surrounding your investments. After your initial due diligence, monitoring the latest developments is the most important task to avoid losses. You can use our newsfeed, revisit our platform reviews, or subscribe to our channel for a brief monthly industry update. Keep in mind that despite performance being a primary indicator of the platform's portfolio quality, experienced investors must consider more variables when evaluating the risk of P2P platforms. So this video should not be considered investment advice. There is a big chance that some platforms that perform well today may not perform well in a year or two. Even though at P2P Empire we try not to collaborate with such platforms, still we don't control their operations and therefore we cannot always predict the performance in the future. If you think that you just invest once and don't monitor anything, P2P lending might not be the right fit for you. P2P lending remains a risky asset class and there are still plenty of shady operators in the industry that you should avoid. So let's dive into the portfolio performance of some of Europe's most popular P2P lending platforms. In terms of loan book size, Mentos is still the leader in the market with over 619 million of investors' funds under management. Over the past month, the pending payments increased while the amount stuck in recovery decreased. Currently, over 21% of the platform's loan portfolio is in pending payments or default. This means roughly a fifth of investors' funds are at significant risk. While Mentos managed to decrease this amount by around 5 million over the past 12 months, it's unlikely to see a full recovery of the funds from defaulted lenders, which currently stands at close to 135 million euro. Mentos has also just announced a new 0.29% annual fee on custom auto-invest portfolios. This fee will be calculated daily and deducted from investors' accounts on a monthly basis. Importantly, it only applies to new investments made from May 16 onwards. Existing investments and manual investing remains unaffected for now. Naturally, this hasn't gone down well with all investors. Many already hold portfolios with a high share of defaulted loans, and an additional fee on top of unrealized losses feels like adding insult to injury. The reality is that most P2P platforms, including Mentos, have struggled to become profitable, and while fees are standard in the world of stock trading and ETFs, they are still relatively new and sometimes even controversial in P2P lending. That said, it's disappointing to see such fees introduced by platforms that have not exactly built a strong track record in recent years, like Estate Guru or now Mentos. But ultimately, the choice is in your hands. If you disagree with these changes, there are still alternative platforms out there that may better align with your expectations. Let's move on to Estate Guru, which reports the most tragic portfolio performance in the history of the platform, with over 61% of its outstanding portfolio in default. While the platform's recent blog posts are always aimed at presenting the most positive news, the data speaks for itself. The quality of the platform's portfolio decreased by under 2% in the last month. Even if we were to ignore their defaulted portfolio in non-active markets such as Finland and Germany, the default rate in active markets, which are regions where they are still issuing loans, is at staggering 29%. Some interesting data points can also be reviewed in the platform's historical funding performance. As you can see, the funding has been shrinking from 2021 onwards. A decline in funding volumes means ultimately less revenue for the platform, but it also signals less appetite from investors to fund newly listed loans. How much of the 138 million euro of Estate Guru's portfolio can actually be recovered remains to be seen. Even though the market conditions are not favorable for investors, we should not expect a full recovery of the funds. Let's switch to some positive news. P2P is currently leading the market in terms of the highest performing loan portfolio. The platform is managing around 116 million with no defaults. Additionally, 97% of their loans are current, which is pretty impressive. Because of this excellent performance, investing on the platform remains a challenge due to high demand from investors and lower supply of loans. New investors should therefore seek alternatives if they wish to deploy their funds quickly. Robocash also continues to perform well. While the portfolio size is not growing, the loan book performance remains stable. At the time of recording, there are even a few available loans from the Philippines at a 9% interest rate. Robocash also presents an admirable 96% of current loans. As you can see, P2P and Robocash continue to lead the pack with an outstanding track record in the industry. Thanks to their consistent performance and lower perceived risk, both platforms have seen strong investor demand, which in turn has allowed them to reduce their funding costs and offer loans at lower interest rates. While interest rates are not always a reliable indicator of risk, the case of Peerberry and Robocash, they largely are, reflecting the platform stability and investor confidence. Another well-performing platform is Esketit. The company managed to grow its portfolio last month, which means higher loan availability and lower cash drag. Inrento continues to deliver solid performance, managing a 34 million euro portfolio with no defaults to date. The platform also released its 2024 annual report, which shows a slight dip in profitability, a trade-off driven by its strategic expansion into new markets. Swapper also continues to perform well, followed by Fintown, which continues to offer relatively high-yielding investment opportunities with monthly cash flow and various loan terms. Currently, the platform manages over 13 million euro of investors' funds without defaults or payment delays. Indemo is also growing its portfolio while updating its flow stages of its debt. The flow stages represent the timeline of the debt recovery process. These flow stages indicate the position of each asset in the debt recovery process, so the further along the right, the closer the asset is to generating profit. Lectera also provided us with the latest figures on their Austrian portfolio. At the time of recording, we only have access to April data. However, by the time you are watching this, we may have updated statistics available in our full Lectera review on P2P Empire, so feel free to check it out for the most current numbers. For LoanVest, we didn't notice a change in portfolio amounts last month. The income marketplace improved its portfolio quality by reducing funds in the buyback initiated category. Currently, the platform manages over 21 million euro with less than 1.5% of the portfolio in recovery. The platform also released some information about its financial performance, which you can find in the news section on P2P Empire. An investor on Debitum reported last month that the platform faces payment delays from its lending partner Triple Dragon. This is not unusual for P2P marketplaces, as they often don't control the lenders. Situations like this can only be resolved if the lender wants to collaborate with the platform or by legal actions, which can take time. This is a risk on most P2P marketplaces that raise funds for third-party lenders. Naturally, you will not find this information on the platform's blog, as it's not positive. Remember, most marketplaces make money from lenders, so the primary goal is to always raise as much funding as the funding limit allows. On Crowdpeer, we have seen an increase in outstanding portfolio amounts, but also in funds in recovery. Lande reports a slight decrease in the outstanding portfolio and an increase in defaults. The recovery of the loans on Lande is straightforward compared to platforms like Estate Guru. Lande publishes a monthly report about the recovery progress and shares useful loan updates that cannot be found on other platforms with similar business models. According to my experience, the recovery of funds on Lande is significantly faster than on many different platforms. The recovery time may, however, vary depending on individual cases. At the moment, Lande's default rate has surpassed 10% of its portfolio. The default rate also increased for Capitalia, currently standing at 11.61%. The number of loans with a repayment delay of more than 90 days increased over the past month. Vino announced the appointment of a new interim CEO, marking the fourth leadership change in just 5 years. For investors, such frequent turnover at the top is a potential red flag, often signaling deeper structural or strategic challenges within the company. If you have been following this channel, this is most likely not surprising news for you, as we have been reporting about Vino's poor management decisions in the past. Another notable development in the industry is Heavy Finance's rebranding to InSoil Finance. Unfortunately, this rebranding has not brought much added value for investors. Key portfolio updates from previous months have disappeared, and the statistics page appears incomplete, with no transparency regarding loans that are over 90 days delayed. From my perspective, the rebranding feels rushed, and this is reflected in the various inconsistencies across their website. There has been no update from Reinvest24 last month. While Bondor has introduced a visually updated statistics page, it offers little meaningful value to investors. The platform still withholds key data, most notably the total outstanding portfolio amount remains undisclosed. Historical defaulted loans are also hidden, making it impossible to accurately assess the platform's overall performance and risk profile. The only useful piece of information currently available is that the majority of Bondor's portfolio is allocated to its lending activity in Finland, but beyond that, transparency remains limited. On the topic of transparency, or the lack thereof, let's talk about Bondor. If there is one thing Bondor isn't short on, it's bold marketing claims. Recently, the platform proudly announced that it had sold out all loan listings on the primary market, trying to frame it as a sign of overwhelming investor demand. What they didn't mention, however, is whether the actual loan supply had simply dried up, which could just as easily explain the low availability. They also celebrated an all-time high in assets under management, yet conveniently failed to provide any actual numbers. But the most absurd announcement came in a blog post titled Bondor recovers millions from defaulted loan originators. This was essentially a PR stunt to repackage a single successful recovery from back in 2023 when Rapid Credit repaid investors as if it were breaking news. The platform keeps citing large figures in Czech crowns, which is irrelevant as most of the investments were made in euros. Bondor even claimed the successful recovery from Rapid Credit and other originators confirmed that Bondor is a stable and reliable partner, and that your investments are in good hands. So let's be clear, this is nonsense. In reality, many of their lenders remain in default with minimal signs of progress. 1 year after Quick Check defaulted, Bondor's latest update reads: "We are continuing to pursue the Quick Check provider to recover the remaining amount owed to investors." So they're just asking politely for over a year? It seems the lender doesn't care, and Bondor isn't doing much to change that. Unsurprisingly, the platform doesn't disclose how much of its portfolio is currently in default, or even the total outstanding portfolio value. That's obviously a major red flag. So if you're new to P2P investing, be cautious, because these kinds of feel-good blog posts are designed to lure in inexperienced investors who might think, wow, this is actually a great platform, when in reality, Bondor is one of the worst performing platforms on the market today. And it's not just Bondor, similar strategies are also used by Monofit and Lender Market, platforms where investor interest seems to be the last priority. Recently, someone in the comments asked about Juvo, a Bulgarian platform that continues to operate with minimal transparency. Despite being in the market for several years, Juvo still doesn't publish any meaningful performance data, making it difficult for investors to assess the platform's health. From their latest blog post, it appears that a significant portion of their loan book is tied to Easy Credit, one of the platform's largest lenders and part of the same group that owns Juvo. That level of internal exposure is something investors should keep an eye on. While Juvo is not the worst platform out there, it's far from being among the best. The absence of clear information about its defaulted portfolio is especially concerning for those already impacted and does little to inspire confidence among new investors. The last two platforms on this table are Afranga and YInvest. Based on the latest available information, Afranga is managing an estimated 10 million euro in assets. However, the platform currently does not publish any public performance data, leaving investors in the dark when it comes to key metrics. YInvest, on the other hand, reports a portfolio size of nearly 50 million euro, but similarly offers no insights into performance, default rates, or recovery progress. For investors, this lack of transparency makes it difficult to assess the true health of the platform. So that's been the latest update from the industry. As you can see, not everything is constantly developing in the right direction, and being able to evaluate the newest platform announcements critically can go a long way when it comes to protecting your investments. If you found this video helpful, don't forget to hit the like button and subscribe so you don't miss out on future updates. Thanks for watching, and I'll get you in the next one.